I am delighted to welcome you to PIEX Virtual Roundtable. So my name is Christie Bourron. I am the founder and CEO of PIEX, Passion Investment Exchange, which I started in 2014. My involvement with the art market dates back from the end of the 90s when I started the first online art gallery. I love the art market. It's a very intriguing market. It's a market you feel you never fully understand, and it's always a challenge to continue to try to understand. It's a market where passion is the first driver, where data is definitely a good element to help understand. So that's my link to the art market.
Good morning, everybody. My name is Laura Merlini. I'm responsible for DB operations at CAIA. CAIA stands for the Chapter Alternative Investment Analyst Association. I'm so happy today to also welcome a member, Sajal, who's a CAIA member in Dubai. I'm actually based in Geneva, Switzerland. And CAIA is about alternative investments. So to put it in a simple way, anything that it's not bond and equity, that it's alternative. So everything that goes from hedge funds, private markets, commodities, structured products, anything that it's more of a niche, because it is a niche. And why am I interested in art? Because art is not part of our curriculum yet. And that's the point. I'm here like a listener. I'm here like an agnostic person who has seen an increased inflow into the art market and would like to understand it better, to see maybe in the future if we could include this important asset class, because it is becoming an asset class within our curriculum and something really interesting for the financial professionals. And I stop here. Thank you.
Thank you, Laura. Adrian, do you want to take it from here?
Lovely. Lovely to see you, Christine, by the way. It's been far too long. Very nice to see you again. And hello, everybody else. Lovely to be part of this. My name is Adrian Bedell, and I have been in the art market for 30 plus years. I spent most of that time at Sotheby's. I was running the 19th century European paintings department and in the Impressionist and Modern department. And I now have my own business, which is dealing in fine art, principally in secondary market, late 19th century, early 20th century pictures. And I also run the picture department at a small auction house called Chiswick Auctions in West London, which is really dealing in pictures from about sort of literally £100 to £50,000, £60,000, that kind of niche, that sort of range. And my private dealing tends to be above, well, is above that level. So there's no sort of conflict there, so to speak. And that's it, really. I live in West London.
Wonderful. Well, thank you, Adrian. And it is definitely lovely to see you too. It's been quite long, as you said. Tola, you want to say a few words? Thank you for joining us.
Thank you, Christine. It's lovely to see you. I hope you're keeping well at this time. It's tricky, isn't it? So I'm Tola Sloan. I'm an art consultant. I'm based in the UK, but I spent about 10 years living in Singapore. So my sort of areas of expertise are contemporary art from Southeast Asia and wider Asia region, and also Europe. So I work with private collectors and corporates, and yeah, that's a summary, really. It's lovely to see everyone else.
Thank you, Tola. Sajal, your turn.
Thank you, Christine. Thank you, Christine. Really great to see you all here. So I am mainly my background is investments. I've been managing investments from last 20 years, mainly Middle Eastern family offices. And I came across art via two things. One is helping these families invest into art, and I got married to an artist, and that led me into this. And I've been collecting Indian art from last 12 years.
So thank you. Good morning. My name is Gregor Kleinknecht. I'm a partner at Hunters Law, one of the oldest law firms in the UK. We're looking back at over 300 years of history. And in short, I specialize in art and cultural heritage matters. That's both accompanying transactions, the sale and acquisition of artworks, the transitioning of artworks from one generation to the next, but also disputes, typically things like authenticity, provenance, and simple contractual disputes in the art market. So that's in short who I am.
Thank you very much, Gregor. Matteo, can you please introduce yourself?
I work with Christine at PIEX as a research analyst, and I've always loved art and finance. And before joining PIEX last year, I worked at Christie's in London, and before in a private bank in Milan. And so that's why art and finance magnificently met with PIEX. So thank you all for being here.
I would add that a lot of the research that is going to be presented has been worked on and prepared with Matteo. Okay, so today is actually a very exciting day for Matteo and I, because in addition of having the pleasure of seeing your faces, we are presenting for the first time the results as of the end of April 2020. We've had many virtual roundtables last month, but we ended our research at the end of March 2020. So today is the first time we're sharing these results with you, and we're really looking forward to hear your thoughts on it. And really what we're trying to do is to look at what data tells us about the impact of COVID-19 on the art market. Obviously, COVID-19 had a broad impact on the art market and the world in general. But here, rather than, we want to focus on what we have information on, and this is data on the art market. So that's the prism under which we're going to look at the impact of COVID-19 on the art market. And for this, we're going to start by first, showing you how we track the state of the art market with data. What can we see? What can we not see? Then we're going to look at the state of the art market before COVID-19. Then we'll look at the impact of COVID-19 on the art market. And finally, we'll discuss what is next for the art market. So before I start, I just wanted to say that this presentation is intended for information purpose only, and that it does not constitute an offer or an invitation by or on behalf of PIEX to make any investment. So let's start. Tracking. So when people think about the art market, the financial market, they often think about beautiful graphs with ratios, numbers, analysis, and they imagine the people who do that with armed with a calculator in order to do all these analyses. When people think about the art market, they often think about beautiful artwork, colorful artwork, interesting artwork, and rather than a calculator, they imagine people having a glass of champagne and socializing and discussing and networking. So, but the question is, data is generated in the art market, especially trade data. So where is that data generated in the trade market? To do that, I mean, one thing that we found often very useful is to use the value chain of the art market. In other words, start with the artwork, where the artwork is created, and go all the way until the artwork is collected. So, obviously the art market starts with artists who in their studio create artwork. And then as they start to accumulate a certain number of artwork, they would start hopefully selling these works to art collectors. And initially, obviously, they do it directly. Sometimes it's just to their friends and family, but if there is the work is sold for money, then that's already trade data. Then hopefully the artist starts to be represented by a dealer, and the dealer may buy some of the artworks from the artist. And then hopefully he or she will then sell the artwork to art collectors. At the same time, you can have art collectors who start selling to other art collectors through private sales, or the dealers also through private sales buying artworks from the collectors. And then of course, auction house may come into the picture. Dealers may sell work or buy work at the auction house. Art collectors themselves may buy from the auction houses or sell to the auction houses. And you can also have obviously dealer artists who sell directly through an auction houses, like of course the Damien Hirst case in 2008. Now these are all the potential point where we can have data, trade data generated. But the question now is, what data is available? So if we go back to the graph before, we can here highlight the data that is what I would call transparent data, because it is available and one can track it, search it, and analyze it. And this data is now showing in blue on the graph. And as you can see, it's all the trade around the auction houses. Now there's other trade points where the data, there's little data or it's just no data. And these are now being highlighted as dashed lines because this is often not exhaustive data. And so overall, you know, if we think about what data can or cannot be tracked and analyzed, we can split the market in 3 boxes. There is the dark gray box here that you can see where there is almost no data when an artist sells to a collector, unless he keeps that record. Like, there are a few artists who do that, but most artists often do not. And this data is really untrackable. Then there is the light gray box where there is some data, but it's very sporadic. Gallery may mention the price at which they sold an artwork, but they don't do it consistently, and it's very difficult to track. So in the end, the third box, the light blue box, is really the only one where one can hope to get systematic data and start doing analysis. So overall, you know, we could cut the market in 4 boxes according to dimensions. First, the primary market, which is when the artwork is sold directly from the artist to somebody else, and the secondary market, when it's a second-hand artwork, you could call it a second sales. And then the other dimension would be private sale versus public sale, the public sale being the auction, and private sale, anything that is not sold publicly. And in that case, we have primary market, private sale, no information. That's when the artists sell the artwork. Primary market, public sale, there could be information, but there's very little data because this doesn't happen often. Secondary market, private sale, as the color shows it here, it's very limited information, non-consistent, very difficult to read. And then finally, secondary market, public sale. This is where we can get most of the information. It's the most transparent, especially compared to the other ones, and that's really where we can get data. So what does it mean in terms of the sizing of the market? Well, to give you a better idea of that, you know, I find it useful to use the Ubs report, which I'm sure you're all familiar with. And the latest Ubs report mentioned that the art market sales were 64.2 billion in 2019. So if we take this 64.2 billion and we split it according to the categories mentioned, so here you would have, on one hand, the auction houses, that's the blue categories that I showed before. And according to the Ubs market, it's 27 billion. And then the other category, the one that is not very transparent, is the dealer sales, and that's 37 billion. Dealer sales or private sales, 37 billion. Now, if you went into the appendix and the methodology of the Ubs report, it's very interesting because the report described very clearly how this data was calculated, was obtained. And Ubs estimate that there are about 300,000 dealers around the world. And they decided to, they selected about 6,500 out of these 300,000 dealers and sent questionnaires to them. Out of these 6,500 questionnaires, they got about 17% response rate. It meant about over 1,000 questionnaire answered. And from these answers, which were voluntary answers from the dealers, they estimated that the market was about 37 billion. So what I think is very important to realize here is that their number that is obtained through voluntary reporting. The auction house number is more transparent because there is more information on that, and we're going to look at it in more detail. So first, when you take the $27 billion, you have to split it into two categories, because auction house do not only organize public sale, they also have private sales. And this year they were estimated to be about $3 billion. So that leaves us with auction sales at 24.2 billion. And, you know, there are also a lot of auction houses out there. The estimate is over 6,000 auction houses, obviously. And if we look at this 24.2 billion, it's also interesting here to see how UBS obtained the number. And there is also some reporting by some of the auction houses. Now, if we combine PIEX report here, we can see that Christie's revenue in 2019 were $4.9 billion. Sotheby's revenue was $4.7 billion. And Phillips' revenue was $700 million. So here they are. And the rest, the 13.8 billion, is all the other auction houses there. And that's also based on estimates made by the UBS report. So UBS does a very good job at tracking this whole market, which is extremely complicated to get a big picture of, because these are such different players reporting. Now, what we do at PIEX is that we're not trying to replicate what UBS does. Our approach is very different. We want to focus on the players where we can get the most transparent and the more consistent data. And these players are Christie, Sotheby's, and Phillips. And we focus on the three auction houses because we see them as barometers to the market. We do not pretend to track the whole market because actually with the whole market, as you understand, it's impossible to get more than a once a year picture. So, but with Christie, Sotheby's, and Phillips, as you will see later on in the presentation, we can get a very good reading on the market on a monthly basis and very detailed. And that's really what we focus on. So, and we think also that the top three auction houses are very much not only a barometer, but they're also a trendsetter. And when you follow the press and you read the news about what's happening in the art market, whether it's the Financial Times, CNBC, Reuters, or Wall Street Journal, etc., you see that most of the records that are obtained in the art market and that are talked about in the press are often about these top three auction houses. So that's really what we do at PIEX and how we get our data. And I always believe that it's very important to start with this because I think it explains much more our approach and why we use these auction houses as a barometer.
I mean, have you looked at other, especially for the private, for that, trying to shed some light on the private dealing side?
Yeah, I mean, UBS is the most used report, and I think right now it is the one that most people accept as the one setting the number for the market. There used to be, TEFAF used to also have a report. Recently, they stopped a few years ago, and I think the problem with the private market is that there are some number popping here and there, but they're never exhaustive. They never give the full picture. And they're often very biased because you always hear about the good news and you never hear about the bad news. It's very, very difficult to get a good read on the market.
Yeah.
You know, I think especially today, when I think we're going to have an important shift from the public market to the private market, it really, really would be wonderful if it could be more transparent. But I think this is one of the big problem of the art market, that we have a whole part of the art market that is not visible.
And Christine, I have a question for you. Maybe with the AML directive, would that help tracking data in a better way qualitatively, because it's kind of control what's going on in the private market?
It will not help with the reporting because there's no requirement for private transaction to be reported to any entity. So that will not help. I think it will help in a different way. I think because the anti-money laundering regulation will force the actors of the art market to ask more information to their client, I think, I mean, it's one of my assumptions is that in some way it will bring more transparency to the market, or at least it will, if you are asked to provide information about yourself, you may be more likely to ask information in reverse. So by that, I mean that it's kind of a back and forth. And I think in the art market, there's often a tendency is like, don't tell, don't ask in some way. But that you're not asking information about who I am, and I'm not asking too many information about where this painting is coming from. So I think there may be a shift a little bit psychologically for that, but I don't, other than that, there's no, as I said, there's no reporting requirement.
We have a question from Gregor.
Yeah, really a comment. I'm finding that certainly at the moment, some of the smaller auction houses in the second tier and below, because they're smaller, can be a lot more nimble. So just to pick an example, Forum Auctions, which has always been an online-only auctioneer, has always been set up to operate without physical auction space. It is exploiting the current situation extremely well and is extremely successful below the radar screen of the headline news that Christie's and Sotheby's produce. So there's actually a lot of interesting stuff happening below that top tier. So I just wanted to mention that.
Yeah, I think it's a very good point. We have the challenge with that is that, as you said, they are below the radar screen and they're not visible, and often they also do not report most of their results. So it's very difficult to track that. But I hope that as they gain more importance, they will see the value of reporting the information. Great. Well, let's move to the next part. So, the state of the art market before COVID-19. Well, what data shows us is that the art market was already slowing down. If I, here on the screen, you can see, so, again, we're focusing only on Christie's, Sotheby's, and Phillips results. And here on this graph, we have mapped the revenue from 2010 to 2019. So it's the total sales, and includes the buyer's premium. And you can see that there was a strong growth from 2010 to 2015, then a drop in 2016, then a strong run again in 17, 18, and then in 2019, a drop again. And this was a 15% decline in 2019 versus 2018. Now, this wasn't a sudden drop. It's a drop that we observe quarter after quarter after quarter. So here you can see the first quarter from 2010 to 2019, and you see that there is a decline of 17%. Second quarter, again, a decline of 18%. Third quarter, decline of 24%. And fourth quarter, a decline of 10%. So this was the total revenue. And now if we look at it, we use for filters the different auction houses, and we can see that it affected all three auction houses. Christie's was the most affected, with a 21% decline in 2018 versus 2019. Sotheby's had an 8% decline from 18 to 19. And Phillips, which is much smaller than the other auction houses, had a 7% decline. In 19 versus 18. And what we can see also is that the revenue drop was across the key regional markets. So here, if we look at the United States, there was a 19% decline in 2019 versus 18, the largest market. The United Kingdom also had a decline, 18% versus 18. And the sales of Christie, Sotheby's, and Phillips in China also showed a 6% decline in 2019 versus 2018. Now, another trend we can see before COVID-19, so in 2019, is that we saw that the art market was only very slowly moving online. At least, you know, especially after what you said, Gregor, I should say the top 3 auction houses were only very slowly moving online, because as you very correctly outlined, some other auction houses had made some effort to move fast on that type of sales. But here I'm showing you the total number of auctions that were arranged by the top 3 auction houses every year. And you can see actually, you know, when looking at this graph, I find it like really interesting that it is very consistent. The top 3 auction houses arrange every year a very similar number of auction, you know, short of 700 until 2016. And what you can see also very clearly on this graph is that they started to really push on online sale in 2017. And by 2019, they really had increased the number of online sales. And the revenue from online sales also at the top 3 auction houses increased by 27% in 2019 versus 2018, which, you know, in the context of the numbers I've showed you before, where everything was decreasing, is a pretty good achievement. But obviously, the total number of revenue of online sales was only 170 million in 2019. And that's very small if you compare it to evening sales, which decreased, but still represented almost 6 billion in 2019. And day sale, which were over 4 billion in 2019. And so if you look at the share of online sales in revenue in 2019 or in 2018, you can still see that this is this little bar here on the top, and it's very small compared to the other revenue. And the reason for that is that when you look at the average revenue generated by an online sale over time, I mean, you can see, you actually can hardly see the amount because it's so small on this graph. But an average online sales in 2017, well, in 2018 and 2019, an online sale generated on average about $1.6 million. And that's very small, especially compared to the average revenue generated by a day sale, a live day sale, generated on average and pretty consistently across the year about $10 million. And compare this now to an evening sales, where you see much more volatility here, but evening generated on average in 2019, $50 million. So we really have, you know, based on historical number, an online sale generated $1.7 million and an evening sale generating $50 million on average per sale, a very big difference historically. So that's what I wanted to share with you today about the state of the art market before COVID-19. And maybe I'll open the floor for a few comments and questions on these numbers, if there are.
Christine, if I may.
Yes, Sahal.
Yeah, so historically what we have seen when the financial markets are at the top, there is a lot of disposable income in terms of going into art. So what really happened in 1819, because your typical big buyers are your hedge fund managers, private equity managers, and some big families. So you see any data in terms of why it's going down? What happened over there?
Well, the data we have, yeah, but what we've seen is that over the years between 17, 18, and 19, was the growth in revenue was driven by an increase in price per item sold, especially at evening sales. So the prices would become more and more expensive, while the number of lots was becoming less and less. So there was really an inflation in price, less offer, and at more expensive price, and the bidding was going higher and higher, especially encouraged with we believe third-party guarantees. And we think that in 2019, this reached a tipping point where the bidding didn't go as high. So, and because these were on very, very expensive lots, it had an impact on the market. And actually, if you look at, if, let me see if I can go back to the previous graph. Yeah, I think this graph is pretty telling, where you can see that the average revenue for desk sale hasn't really decreased, but the average revenue for an evening sale really shifted down in 2019 versus 2018. And you, by the way, saw the same thing happening in 2016. Mm-hmm. And that's because for the top 3 auction houses, the evening sales are really extremely important for their bottom line. I mean, I shouldn't say the revenue line.
Right. And if I may
Christine,
add,
I think they had the Rockefeller sale and the Leonardo in 2018. Absolutely. Which is, it makes it so that curve would probably have gone down had it not been for those 2 events. Totally.
And that's why you remember, as you may remember, Christie's experienced the largest decline because in 2018, they had these additional pluses that were once in a time events, the Rockefeller and the Leonardo. And in 19, they were not able to replicate it. Absolutely, Adrian, you're totally right. Gregor, you wanted to say something?
Yeah, just the question really, how safe is it to assume that the art market as a whole went down during that period? Or is perhaps one of the possible answers that people just started transacting differently, that there were either more private treaty sales or more secondary market sales through galleries, because some buyers or sellers might simply have felt themselves priced out of the Christie's and Sotheby's league of dealing.
It is very possible and very fair, and I think that is exactly the assumption or that the UBS report is making, because in their report the private market increased while the public market decreased. So it is very possible. That it's difficult to verify though, but it's a fair assumption, absolutely. But in terms of data, what it means for us is that less data to track what's happening.
Sotheby's announced they'd done $1 billion last year in private treaty, I think.
Yeah. Out of the three that we took out in the graph earlier on. Yeah. No, it's possible, and but interestingly, I think when people switch to the private market, they still use public market data to justify their pricing in private. So it's always this equilibrium.
It's very true. I had a client the other day saying, "How am I going to know how much anything's worth because there aren't any auctions going on?" Or if we don't have any auctions in contemporary and not impressionist and modern, we're not going to know what anything's worth. Absolutely.
And what's your experience in terms of past sales, like compared to private market? Is public market auction is expensive, so that's the preference, or people want to hide who is behind it, and as such you can hide there also?
Well, it's tough to me to say because I only see public sales, so I don't know if somebody else who has a view on the private sale has a comment to make on that.
Sorry, just repeat the question again, Sajal.
Yeah, so a lot of these buyers prefer to go for a private sale rather than a public auction. So is there a cost advantage over there, or it's more of they don't want to come out in open in terms of the identity, how it works?
Well, I think it's a lot to do with timing. And it's definitely to do with price. But a lot of people don't want it's a completely different process. That when you have to have decided whether you want to buy something by the 15th of May, let's say, and whereas that's at auction. But if it's a private sale, it's a negotiation, it's a consideration. You can think it through. And I'm sure Tola would probably agree on that front. It's a completely different animal. I mean, it's so different, the private dealing mentality to and I think buying privately. And I think some people are definitely auction animals, and I think some people are, as clients, as buyers, and indeed sellers, are private. They prefer to go down that private route for reasons of privacy, for reasons of price, for reasons of timing, and because they've got something which perhaps can't be leveraged properly through auction in terms of price, in particular.
Excellent.
Yeah, I would say that also it's a matter of perceived control, in the sense that when the seller delegates to the auction house, then the auction house selects where to place, when to sell, and how to sell it. Also, all of the value creation of the value chain. While in the private treaty, probably has more control over the negotiation and over the process. And the fact of where to sell and how to sell has a huge impact on the overall result. Let's look at the famous Leonardo. It was said an old master painting, but actually was sold in a contemporary evening sale in New York. So this also affects a lot the overall pricing. So it needs to be put in correctly in the right context in terms of timing and price, as you said.
Thank you.
Other comment or question or? Okay, let's move on to the next part. The impact of COVID-19 on the top 3 auction houses and what we can see of the art market. The impact was very visible because, as you know, it led to the closure of the key physical location of auction houses and galleries also after mid-March. So if we take the regular schedule at auction houses and we focus on the 4 key locations, New York, London, Hong Kong, and Paris, we see that in January, February, sales went through in New York, no problem. Same thing in London, and same thing in Paris. In Hong Kong, there actually were no live sales scheduled. And I mean, as you may remember, Hong Kong was already had many questions because in the fall, there were a lot of demonstrations, and then obviously it was sensitive to the problem of COVID-19 already early in January. So maybe for that reason, no live sales were scheduled there. There were a few online sales there, and the most important sales that was supposed to happen in Hong Kong was the Sotheby's Modern and Contemporary Hong Kong sale, which was scheduled for April. And as the issue of COVID-19 became more and more important, Sotheby's started to talk about moving that sale to New York. Christie's and Phillips had a bit more time because their sales were as traditionally scheduled to happen in Hong Kong in May. So they were talking about moving the sales later on to June. And actually some people at Christie's also told me that they were thinking of potentially bringing the sale to New York too. So March started and the sales went through in the first 2 weeks of March, no problem. But then obviously governments in different places started to order the auction houses to close their doors. And the last live sale took place in New York on March 16. In London, it was March 19th. And in Paris, it was March 17th. And then from then on, in New York and London, all sales, live sales were postponed and some sales were moved online. And in Paris, all sales were postponed. And in April, I mean, well, first the Sotheby's Modern Contemporary Hong Kong sale was moved to later time. And in April, we only had live sale, online sales, no live sales. So, in terms of number of sales, number of auction. Well, if we focus on the month of March, and here I'm showing you the number of auctions that are arranged historically at Christie's, Sotheby's, and Phillips for every year for that month. And we can see that in 2020, 15 sales were canceled in March. And some sales were replaced by online sales. And we ended up with having 60% of the sales in March being online. In April, we had many more sales canceled. We had 40 sales canceled in April. And we ended up with 100% of the sales being online because no live sale could take place. If we look at each auction houses, we can see that they reacted in different way. And here you can see, so it's again the number of auction arranged by the top 3 auction houses. And you can see that Sotheby's arranged the largest number of auction in March. And the reason for that is because very rapidly, Sotheby's started to move a lot of their live auction online. So that allowed them to auction most of the lots that they had cataloged for the months. And you can see here about 75% of their lots were auctioned in March, and only 25% of their lots cataloged were postponed and stayed in inventory. While at Christie's and Phillips didn't move their sales online, 100% of the lots that were scheduled to be auctioned in March stayed postponed, so they stayed in inventory. And for Christie's, that represented more than 1,000 lots. Phillips only had 1 sale in March that they were not able to go with, and that led them to 170 lots being postponed. In April, we see the same trend because Christie's announced that they would do more sales online, and we do believe that in May we're going to see more sales online for Christie's, but in April we still didn't have a lot of online sales at Christie's. But Sotheby's maintained quite a large number of online sales. And so it's really interesting here to see how you had very, very different strategies. And the reason for that are probably a mix of, and it will be interesting to hear, Gregor, if you have any comments on that, but we believe that it's a mix of technical reasons. Sotheby's was probably better prepared to move online. Probably legal reason also, because the move from a live sale to an online sales can have some legal consequences. And then maybe a question of management. I mean, it's going to be very interesting to hear what were the enabler and things that may have prevented the auction house from doing it. So what was the impact on the results for the first quarter 2020? Well, if we look at the number of auctions over the whole quarter, so now we're looking January, February, and March, we can see again that online sales for this year in 2020, for Q1 2020, online sales represented 40% of the sale, which never happened before. So really online, I mean, when people say that this is the art world has gone digital, you can definitely see it here. Now, what was the impact on revenue? Well, you can see that online sales did not represent 40% of the revenue in the first quarter 2020. And that evening sales, despite being the smallest number of auction arranged, still in the first quarter of 2020 remain as the largest provider of revenue, which you know, in some ways makes sense given the numbers that we looked at historically before. So it is safe to say that the revenue shortfall from canceled live sale was not compensated by the increase in the number of online sales over the first quarter of 2020. Now, where did that revenue come from? And here for the first quarter, what we like to do at PIX is to focus on the key sales that were arranged that quarter. So you can see that in January, we had the New York Old Master sales in New York. In February, we had the Impressionist sale and Contemporary sale in London. In March, we had the mid-season Contemporary sale and the New York Asia Week in New York, and the Paris Impressionist sale in Paris. And here, so let me show you the number of auctions again that were arranged by the top 3 auction houses year after year. And you can see these auctioned by the types of sale. So again, to me, it's really interesting to see how consistent it is year after year. And obviously here, when you look at 2020, the first thing you notice is that what the New York Asia Week doesn't, there were no sales arranged, and that's because they all were canceled. Actually, there was one sale arranged from the New York Asia Week. So that's the yellow box that does not appear in 2020. Now, the other auctions that do not appear here, obviously, are the Paris Impressionist sale, the light green box here. There were no sale because they were canceled. And also, I should note that you will notice that there is no red box in 2020, which is the Hong Kong Spring Sale. But this wasn't due to COVID-19. It's due to scheduling, because as you can see, it was an exception that in 18 and 19 there were auctions from that type of sales, because these sales, as we're going to see later on, they usually take place in April. So because of that, they don't appear in the first quarter. So that's the impact on the number of auction arranged. Now let me show you the picture for the revenue, because it's pretty different. So we have the same sales, and now rather than looking at it in number of auctions, we look at it in the revenue generated by these auctions. And here again, you can see no revenue from the New York Asia Week, because the sales didn't take place. So obviously they couldn't generate revenue. No revenue from the Paris Impressionist sale, which you can see is not as much. So you have to imagine, that if it hadn't been for COVID-19, you would have seen the yellow box and the green box on top. But as you can see, it doesn't explain fully the drop in revenue in 2020 versus 2019 for the first quarter. What explained the drop of revenue more directly is actually the Impressionist sale and Contemporary sale, which took place in February in London. And especially the Impressionist sale, as you can see, really did not generate not even half of the revenue that they generated the year before. And Contemporary sale also generated less revenue than they did the year before. So obviously the London February sale were a key reason why the revenue in the first quarter 2020 were less. Now, was that an indirect effect of COVID-19? It is possible. One could argue that Asian buyer did not participate in that auction because they were focused on something else. And maybe Tola, you may have some comments on that.
I think that's right, Christine. Yes.
Yeah.
A lot of the Asian buyers were not really coming for London in February.
Yeah. So that's an indirect effect of the market. So that's for the first quarter 2020. Now let's look at what happened in April. So this is the latest results, and it's as you may remember, April is interesting because as we've seen before, in the months that we just closed, we had 100% of online sale. And that's why, to me, this is almost like what you could call a torture test for online sale, because before you could always argue that, well, online sale do not perform well because actually when given the choice, really people prefer live sales. They prefer to go there, they prefer to attend it. So April, no live sale. It's you buy online or you do not buy, at least in the public market. Obviously, you can still buy in the private market. But so what happened? Well, if we look at the revenue generated in April and we compare it to the revenue year after year, we can see that the revenue from online sales for Christie, Sotheby's, and Phillips was not, I guess, to the scale as they would have expected it in the year before. And it was, I think, particularly important for Sotheby's, and that's why they've really kept their effort in April. And you can see, you've seen this graph before. Again, it's the number of auction arranged, and you can see that in April, Sotheby's traditionally arranged more auction than Christie's, and this year continued to have more auction than Christie's. But as you can see, the revenue for April was mostly generated by Sotheby's. All that online revenue was generated by Sotheby's. Christie's and Phillips did have some revenue from their sales online, but it is so small that it doesn't even show on this graph. And, I mentioned that the month of April is important for Sotheby's, and that's because in April, Sotheby's has its Hong Kong sales, like as we discussed before. And here on this graph, you can see now, remember the red box in the earlier graphs, where you can see now how these sales usually take place in April. And you can see in 2018 and 2019, by the way, that the months of April show a little bit less auction arranged by the auction house in that year, but that's now, you know, it's because these sales happen in March. They started a bit earlier, and that's why April doesn't fully show the total of these sales. Now, what you can see for 2020 is that Sotheby's did have some sales online, specifically for the Hong Kong market. They were in Hong Kong dollars, and they were advertised to the Hong Kong market, and they were in line with the types of sales Sotheby would have usually in Hong Kong. But if we look at it in terms of revenue, here you can see here the Hong Kong sale do generate more than 50% of the revenue for the month of April for the top 3 auction houses in red. But that this year, really the sales that were arranged for, you know, for this particular type of sale, again, did not generate the revenue that they're used to in the years before. So, and if we look at it finally in terms of items, because there's been a lot of discussion on the types of online sale that work. Some people say, well, yeah, online is great for jewelries, but online works better for wine, online works better for this type of auction. So here what we've done is that we split the auctions by their focus. So in gold at the bottom, you can see the auctions that we call the fine art auctions, where one can buy artworks. In olive on top of the fine art auction, you can see the private collection sales. So, and we always, at PIEX, we always track them in a different way than the regular fine art auction, because we think that provenance really matters, and it can lead to different behavior, especially for pricing. Then in yellow, you can see the decorative art. So these would be furnitures, rugs, anything that helps with decor. And then in light blue, we've got the accessories. These are jewelries, they are watches, they could be bags. And then the gray part is anything else. So you can see how they split historically. And you can see that in 2020, it was actually quite a mix, but with fine art and accessory really representing the largest category of the online sales being arranged. And if you look at it in terms of revenue, again, you see that fine art and accessories are the largest provider of revenue, but there's no clear winner. But I think it is still too early here to judge what works best and others. And that's one thing that we're really looking forward to track more and in more details to really see if some items work better with online than others, and what data is going to tell us about this. So, you know, in the end, what we see, if we look at, again, average revenue generated by the auction houses, but this time over the months of April. So it's the same chart as we've seen before, but rather than looking at it over the whole year, now we just focus on the months of April. And we can see here that, you know, the revenue in April generated is pretty standard, and it's around $10 million. And it kind of makes sense because in April, you do not have any big evening sale. So usually it's mostly day sale, and it's therefore not surprising that we would have revenue around $10 million on average generated by the sale. And here you can see the sharp fall in 2020, where the revenue drops to, well, a number we've seen before, which is 1.6, which is the average revenue generated by online sales. So, so that's the revenue per auction. If we look at it per item, so this time we've taken all the lots that were sold in April. We've taken the total revenue generated in April year after year, and we divided the revenue by the number of lots. And we can see that actually the revenue per lots had been increasing. And Sajal, this is linked to kind of the point we discussed earlier about how the growth in revenue was coming from in the previous years. So, and we can see that in 2018, we reached the maximum, which was over $70,000 generated by sales, by items sold in April. We see a drop in 2019 to around $60,000 per item sold, and then a sharp drop, obviously, in 2020, where we go around $15,000 per item sold in the months of April. So really, I mean, if we look at the average generated, the total revenue generated, the trend is really down. And we believe at PIEX that it's very, very linked to the format, at least so far. This is what data has been telling us so far. We're not saying that that it could continue in the future, and actually, well, in the next section, we're going to discuss about that. But this is the end of part 3, and I'd like to again open the floor if there are any comments or suggestions. And maybe Tola, you want to add to the...
Yeah, I think it's interesting to think about the value of each lot sold and to look at it that way in terms of online sales. Because my experience in online art sales over the last 5 years is that the figure that people are comfortable spending online has grown. So perhaps 5 years ago, you know, people were very comfortable around $10,000, but now people often talk of spending $50,000 buying something online. And I was reading an article by Phillips in the art newspaper, and he was even suggesting that people are comfortable up to $500,000 now. So I think that change will impact the total revenue made on online sales. I don't know if you do a breakdown, Christine, of the lot values and how different sort of sectors are doing.
No, we do, and we have actually a very interesting graph where we map all the different pricing for all different lots. No, it definitely has been growing, but definitely, you know, when you and probably, you know, our graph is unfair to that because we have such a scale that the growth that you may have seen does not appear. That's because we compare it to evening sale.
Yeah.
At online sale, we could see a trend up. And that's why you had this growth of 27% also for purely online sale. Now, the point of what people are comfortable spending online, I think sometimes there's a little bit of confusion because what we called online sales are purely online sales. So it's the format where the sales start at a certain day and then it lasts for 4, 5, 10 days. I mean, it depends. And then at some point it just finishes and there's no auctioneer, there's no live presence. It's just a pure online sale. Now, and for that, we find that the price remain quite low. It's been increasing here and there, but not consistently. Now, where we've seen an increase and where we've seen people talk about it is that some people consider an online sale when there is a live sale, and then people have a choice to either be at the sale, call on the phone, or use the computer to place the bid. Now, as far as we're concerned, we don't call this an online sale. Whether the person used their computer or whether they use the phone is just almost irrelevant to the format of the sale. It's probably for the auction house, it may matter because it probably costs less to have the people using the computer than being on the phone. But it's not, it doesn't change the format. So we do not take that into consideration. And that's probably also why we do not see, you know, on these numbers that some other people see. If that makes sense.
Yes, it does. Yes. And the other thing that, of course, comes into my mind, which isn't necessarily relevant for your data, is the, you know, online art fairs and that sort of online sale. I see differences in the price point people are comfortable with in that format as well.
Yeah, so that's very interesting. And you know what we're really hoping is that with this online art fair, prices will appear. And some have started to show their prices, at least the asking price. I'm not too sure about the real price, whether that's going to be public. I mean, it would be wonderful, you know, it would be great, and we would love to start tracing it.
Yeah, I mean, Freeze New York last week, most galleries listed every single price. The only things that weren't priced, I would say, are sort of over the $1 million mark.
Yeah, Gregor, do you want to say something?
Yeah, just perhaps coming back briefly to the question you raised earlier, what the reasons might be that some were quicker to go online than others. And as far as I can see from my practical experience, there are 8 technical reasons. Again, looking at some of the smaller auction houses, they just use some of the common platforms such as salesroom.com, where they had standing arrangements anyway. So they just carried on with those arrangements. And in some respects, there are legal reasons. So with quite a number of auctioneers, we have done sort of COVID-19 updates for their terms and conditions of business, because if your terms and conditions say you, the bidder, are taken to have inspected the lot personally and satisfied yourself as to condition, well, that doesn't work if I can't go and actually inspect the lot. If the terms and conditions say you must collect, and again, that doesn't work if I can't actually go there and collect my artwork. So there are quite a few areas where there tweaks are necessary for the whole thing to actually work properly. And some were just quicker in picking up on that than others, really.
Yeah, and what about the return policy? Would the move from live to online affect that?
It does, because online, interestingly, art collectors are consumers as far as the law is concerned, and whether you buy a washing machine or an artwork doesn't make a difference. You're entitled to return it for a period of 14 days after you've taken delivery. So from the auctioneer's point of view, the clock starts ticking once the buyer has collected the artwork. So if the artwork stays in storage for the next 6 months because it can't be collected in person, that delays the time period when the sort of clock starts ticking on the cancellation right. So going online has these sort of consequential issues. And then for the auctioneer, obviously the question is, well, do you really want to pay out your consignor, even though you've had the money from the bidder? If the bidder still has or the buyer still has the potential of cancelling the sale, and you then have to go after the money, which is possibly with a consignor who's overseas and not necessarily going to be prepared to refund. So there are all these sort of complications that arise in that context.
And that is, my understanding is that it's for London, in part, well, for the UK.
For the EU, sort of resident sales, for example, as well.
The next part is a question, actually, because you know, it's very difficult to have data on the future. It's already difficult to have data on the past, but the future is even more challenging. So the question is, what's next for the art market? So let me show you what we know. And again, we can look at the past to try to guess how the future is going to look like. Well, and here you can see the revenue for the second quarter historically. So this time, you know, so far we've looked at the first quarter. Now let's look at the second quarter. Let's look at how much revenue the second quarter has generated for the top 3 auction houses from 2010 to 2019. And here, obviously, you can see that evening sales have provided the core of the revenue. And as you all are familiar with the art market, it's not a surprise, because in the second quarter, we traditionally have the New York May sales, which are one of the highlights of the art market, the auction business. And they do generate a tremendous amount of revenue, especially in their evening sales. So the rest is day sales, which often tag along the evening sales. And then you can see also at the top, again, this very slim white line, which is the revenue generated by online sales historically. And There was revenue before 2017, but it was so small that you can hardly see it. So that's how historically the second quarter has been. If we look at what's going to be for the second quarter, as we've seen before, is that April and May will only be online sales. I mean, we know for sure there will not be any live sales. And in June, depending on feasibility, the auction houses are planning to have a lot of these key sales that should have been scheduled in April or May. And right now, a lot of them are scheduled for June, potentially also a little bit July, but we're already out of Q2. So it really looks like bottleneck in June and only online sales in May. Now, we do believe that the months of May may be a bit different from what we've seen in April, because in April, as you may remember from the earlier charts, we didn't have any, I mean, we had a little bit of the sales, the New York, the Hong Kong spring sale by Sotheby's, but it wasn't, the sales they arrange online were not their key fine art sales. In May is going to be different, and actually starting this week, we are going to have some very, very interesting sales, which are the contemporary day sales, because both Christie's and Sotheby's have decided to place some of the lots that were scheduled to be run into their day sales into these online sales. And the consequence of that is that these sales are going to have lots in the range of what you were mentioning, Tola, earlier. There's going to be lots offered for sale online in the price range of 50,000 to 100,000. And these sales are going to go. So Sotheby's has one sale with about 144 lots in this price range. And Christie's has two sales, half this number, and they run about the same time. So I think this is going to be the first time that we're going to have online sales with such high price value artwork. And we're really looking forward to analyze the performance of these sales. The week after that, we also have a very interesting sale, which is going to be next Monday on the 18th, which is going to be at Sotheby's again, and it's an online impressionist sale. And we believe again here that a lot of the day sale works were placed in this sale, so much higher price point. So again, it will be interesting to see and to compare how the contemporary online sale perform versus the impressionist online sale, and to compare that to the performance they would have had when they were online sales, they were true day sales. The works from evening sales are not moved online. As you can imagine, they are definitely scheduled to be auctioned later on when the sales will be happening online. So that's about all we can say about what's happening next. You know, maybe one concern we have is even for beyond Q2 is that as we track the scheduling of the auction, we definitely can see that the auctions are very smartly timed along the year. And maybe Adrian, you'll have a comment on that, but they're timed and they attract the attention of different buyers at different time. And these buyers can focus on these auctions and really invest their time and energy into it. Given the change in scheduling, we may end up having extremely busy months in June, in September, in the fall, where we're going to have multiple auctions at the same time. And it may become a bit confusing, and it may defocus some of the sellers. So it's going to be interesting to watch and see whether these live sales, which have been able to generate such high revenue, will be able to do that in a very challenged schedule. So that's the last graph actually that we have on this fourth part. And I think here we like to open it more to discussion. I mean, maybe things that you've seen in the market that we haven't seen that allow you to kind of answer this question: what's next for the auction business and the art market?
I just think it's quite interesting to know how things are going to be affected sort of locally as opposed to internationally as well. I mean, we're talking about forum auctions, for example, then certainly in Chiswick auctions, the online sales have been doing just as well as the sales before. And to your point, Christine, about online sales, those aren't pure online sales. They are, you can telephone bid, you can leave an absentee bid, and you can bid online. What you can't do is be there in person. But those sales, even without a viewing, and clearly it's been difficult even to collect. In fact, that's only just started, the whole process of being able to collect things. It hasn't, arguably, they've done as well as they would ever have done. So that's an interesting just fact, actually, I think, almost, because even when live auctions were very much taking place, an awful lot of the people who used to turn up to live auctions weren't actually bidding. They were sellers, they were dealers wanting to observe, etc. So there were very, very few bidders in the room anyway. And that, you know, it's so the live thing is not nearly as important perhaps as historically it's believed to have been. So I think, and certainly from a local level and therefore at lower values, I think it's as buoyant as it almost ever was. And Gregor was talking about forum and saying that, and as I say, Chiswick too. So if one can get the material, I think the market will stand up. I think the big issue is for the big three is how they can resurrect themselves out of this. And I confess I wouldn't like to be in their shoes at the moment, trying to dig themselves out of this quagmire, because they've got huge overheads, as we know, and their revenues have absolutely collapsed. And how they get out of this is a massive hill to climb for them. And it's gonna massively change the landscape, I think. It's massive. I think you'll find, in terms of the scheduling, to your point you were asking, I think the scheduling, yeah, they will schedule all the way through the summer, actually. I think they can't afford not to. And certainly in Sotheby's case, which has just been taken private and bought by Mr. Drahi, and he's going to be thinking, we got to sell, guys, we've got to do this. And of course, and also they will, I think also that the private sales, they are ramping up the private sales, because that's one of the few effective ways they can try to sell things at the top end. But everybody's at the top end equally. People are looking for a bargain, which is kind of silly, but they are, because they're saying, oh well, people will be desperate, we can pick some things up.
Yeah, definitely, and we can definitely see, you know, as people are looking for a bargain, we have much more requests for data than we had before. Interestingly, because there is less data, people want more data.
Yeah.
But you know, the good news is historic data is here, so this is what to use to negotiate in these private deal.
Perhaps I can just add, I totally agree with Adrian that auctioneers like Chiswick will carry on happily ever after, and it's the potential glut of auctions at the top end, which is going to be a problem, because I've seen that with some of our collector clients who are not going to consign or actually have withdrawn works from sale later in the year, because they're expecting the sheer number of auctions to put pressure on the market on pricing. Whereas if you're a buyer, then yeah, you may well actually be able to pick up a bargain along the way, because the number of auctions will probably soften both the sort of commission deals that the auctioneers have to offer, as well as the general pricing level.
Yeah, that's a good point. But, and Adrian, you said that you think that they're going to auction through the summer. Do you think there will be auctions in August?
Well, maybe not so much in August, but I think they'll have to be very creative to try and offset their losses. It'll be interesting to see what they do, and you know, but I'm sure sales will go on into July in a way they haven't done before. I don't know what they'll do in August, but None of us know what we're going to do in August, right?
Quick comment on this. At Kaya, we've released a report called The Next Decade of Alternative Investments. So we'll be happy to share it with you at post this presentation. But it's an evergreen, so it's how the alternative investment industry will be shaped in the next 10 years. And we made a clear statement on 4 pillars. And these pillars are embrace transparency, which is, I think, super aligned with the art market. The more transparent the market is, the easier it is to access from an investor perspective. Sometimes, the problem is the lack of data or the biased data that prevent investors to access it in a thoughtful way, a diversifier in the portfolio. And it's used now mainly by private, private money, but it's I hope in the future it will be also attractive for public pension funds or institutional investors. We have democratized but protect, meaning we have an opportunity as the changing, we have a lifestyle change with this crisis. So I think that people will have more money to spend in other things as opposed to before. So less about, malls, restaurants, and there are interesting articles that I can also share with you on how the spending habits will change. And we have to really study these habits to understand the trends of the art market. And I think that it's overall a commit and a legacy for Kaya to educate. And so I thank you for organizing this super interesting panel. But for me, the basic question is how the value business proposition will change, how the future will be, because we've seen that shyly, and you said that the Sotheby's came into the online auctions, but will assist to a definite paradigm shift. I think this is an opportunity and a time to invest in art, but maybe with a different mindset, a different metrics, a different way of approaching this market. And maybe it's just the beginning of a new era, but I would be interested to hear from you, Christine, what you think about these new trends.
Well, I think here, what's happening is so dramatic. I mean, it's a term I've heard a lot, and I completely agree. We're completely uncharted territory for many, many things, but for the art market too. And in the art market, often when I show charts and I show that revenue decreased in 2016, price decreased in 2016, most people are surprised because a lot of people do not follow the data of the art market. They don't have their pulse on the market. And if they realize it's years later. So, but here, there is such a sharp change that I hope at least a lot of people will realize that it is important to follow what's happening, to keep your finger on the trend and understand the trend, because it's an opportunity. As far as I'm concerned, I think it's a great time to buy art right now. I think there was, over the past few years, there were less and less artwork available, at least visibly on the public market. And I think now, if you make a good offer, you probably would be able to buy an artwork like other assets. So I think data is not, some people are afraid of data because they think it's, it may show a bad picture of some art market. I actually think data is a way to make people even more passionate about the art market and want to learn more, and they feel they can. It all makes more sense. So what I hope is that what we're going through. It's happening. We can't change it, but what we can change is what we learn from it. So. I hope it will make people even more excited to buy art. When we started, I said that I found the art market and data fascinating because there's so much you can see and understand in this market when you start looking at the trends and the historical trends and you understand where it can go also. I hope you enjoyed the presentation, and thank you so much for all your comments, which I think made this even more interesting. So thank you very much again. I look forward to seeing you soon, hopefully live But if not, we would love to have you again join us one of our upcoming virtual roundtable, which we definitely will have months after months.
Thank you, Christie.
Thank you, Christine, for organizing.
Very much. It was amazing. Thank you.
Have a wonderful day.
Thank you very much, Christine.
Bye.
Bye. Bye all.